Well, good afternoon, everybody. I want to say thank you so much for joining us here today. My name is Brian Choate, and Managing Director here at Solutions Group. Certainly glad to have everyone with us today. It looks like we have over 400 different folks joining us today, so it's a privilege and appreciate you guys stopping in or joining us today. Just a couple of quick keeping house issues here for everybody. If you're having any audio trouble or video trouble today and you need some help from our team, feel free to email webinar@solutionsgroup.com, and my team is standing by to kind of help with any support issues that you've got. Throughout the presentation also today, if you have any questions that you'd like to submit for Asbel and our special guest to cover today, you'll see there's a Q&A feature there. It's available in the chat window. And so we will be covering those questions throughout the presentation today. So while we're kicking off here, just to give you a little bit of background about Solutions Group, if you're new with us. So we're an organization that's focused on helping our clients, the EMS industry, to recoup money from payers rather than trying to go back after patients and balance billing folks. We created a real-time deductible management solution back in 2014 that kind of helped to revolutionize the space for avoiding high deductible plans. And then with a self-pay scrubbing solution we brought to market for taking self-pay accounts and scrubbing those against hundreds of commercial insurance carriers, Medicaid, Medicare, all really designed to help uncover a payer source rather than relying on self-pay practices. We also, about a year and a half ago, launched a third solution where we take your MVA accidents and your workers' comp claims and can actually also go in directly to liability carriers and find a payer source for those. And then as well as we just launched our brand newest solution where we are now also going to the credit bureau to clean up address information, come back with corrected demographics for date of birth, social security numbers, and basically help clean up billing efforts. So if there's anything we can do to answer any questions for you, we'd love to have a conversation with you guys about it. And then the last piece to tell you about, very, very excited about this piece, coming in February. So next month, we have launched a Solutions Group consulting platform headed up by our good friend Asbel Montez. Asbel's been a partner, a silent partner in Solutions Group since the very beginning, and one of our secrets to success here. And so we're excited to have this new opportunity to reach out and help more providers with revenue cycle questions, some state and local government relations, kind of a GR piece, and very, very excited to be able to roll that out for the industry. So with that being said, I'm about to turn it over to our speaker today. We're certainly a man who needs very little introduction, Asbel Montez, and Asbel's going to head up today to talk about HHS reporting requirements for your CARES Act funds. So Asbel, I'll turn it over to you. Thanks for joining us.
Hey, thanks, Brian, and thanks to everyone for joining us, and good morning to you on the West Coast. And if you're like me, I'm in Louisiana, actually. As well, and it is a nice balmy 69 degrees. And so for you that are experiencing all that winter storm, we experienced it on Sunday with about I think we maybe got 3 or 4 inches of snow in Austin. So I was really excited to see some snow, and my dog Patches was definitely excited to see the snow, but I missed it. But thankfully Stephanie was able to video it so I could see him having fun in the snow. But let's get on to CARES Act reporting, because that's what you guys are here for, not to hear about my dog and the snow. But we did want to give you this disclaimer, and I am glad that Brian Werfel has decided to join me, because we've got a portion on some auditing functions that we just want to bring your attention to, because the formularies and some of the phases of funding have put some individuals over a threshold that we normally did not anticipate at first. And so we did want to kind of spend some time on that to make you aware of some of these issues. And so thankfully, Brian was able to join us, or what I like to call Baby Werfel was able to join us. So this is your disclaimer that what we are doing is for educational and informational purposes only. And some of this, it would not constitute legal advice or accounting advice or what have you as well. So make sure you consult with your CPA, your tax advisors, things like that for some of the information that we're talking to, as it will impact your company. So let's kind of get right to this. If I can figure out what I've done wrong here, perfect. And now I am moving it forward as well. So I've got three different elements, folks, and I'm going to try to end this about 10 minutes before the top of the hour to give you time for Q&A. So please, the Q&A will be monitored, and we will try to get to that to answer as many questions as we can. And as usual with our webinars, what I can't get to, we will definitely make sure that information is followed up and you will have answers to your questions. But I'm going to go through just a brief summary of the reporting guidelines. And I'm going to go through and spend some time on some of the data elements. There's a lot of questions we've been receiving. So I've tried to take, guys, a lot of the FAQ, a lot of the stuff that you're seeing posted to the CARES Act, a lot of it you're having to maneuver through. This has been ongoing for over 9 months now. So there's a lot of information, and I've tried to do a Cliff Notes version for you. Things that I think the ambulance industry needs to focus on and really understand. Some of it is pretty simple. Sometimes we overcomplicate things as well. So I just wanted to try to do a Cliff Notes version, get information to you through all of the hodgepodge of information that you're getting and try to make it simple. So hopefully we'll make this simple for you. The audit requirements, if Brian Werfel gets too technical, I'll try to interject as well, and I'm teasing him because he can't say anything right now because he's on mute. So let me go through the CARES Act and some of the timeline, because timeline is always important to understand. CARES Act was signed into law on March the 27th. It is what is giving us some of these phased funding streams that you are seeing. So April the 10th was the first round of funding. This was the funding that was technically the equivalency of up to 2% of what your Medicare fee-for-service payment. So they basically try to do something quickly, get the money out the door because providers needed it, and basically looked at all those Medicare providers and suppliers. If you had billed the Medicare program, they took a historical calendar year of data and basically divided that into the number of providers, into the number, and it's like a 0.0000% of something, and that was what your first tranche of funding you received was relative to that formulary. Now, that excluded some providers and some healthcare providers. So technically, if you weren't in the Medicare program, you may not have gotten a payment, but you needed it as well because the CARES Act funding was funding for all healthcare providers. It wasn't contingent on you being a Medicare provider. So phase 2 funding occurred, and that was more of an application process. And this is where you had to start uploading your tax filings. And then there was a formulary that they provided to give you up to 2% of your net revenue. And that was that second round of funding. And some of you received funding and some of you did not, because the phase 1 funding, when they made it a part of your Medicare fee-for-service payments, really got you up to your 2% or greater of that net operating revenue. And then comes phase 3 on December the 15th. And some of you still have not received that funding, so I'll answer that question before you ask me. I've tried to send that information out as well. And they just updated actually the FAQ and actually opined on stuff that we had actually already received the information for earlier. So that's a good thing for our industry as well, that we're getting access to information quicker than others are. But this formulary was based upon your an application process as well. And it really looked at trying to bring providers up to a baseline of 2% of their net revenue. And then it also looked at your net losses. And the net losses as you recorded them in the application process, which was looking at increased expenses for the first and second quarter, and also the revenue loss that you received due to the coronavirus in that same time period. And what did your net losses look like? And basically, they wanted to reimburse you 86% of your net losses. So many of you have already received a payment on December the 15th. However, there's still approximately around 15,000 providers, that's not just ambulance, that have still not received funding because there's a quality review happening right now. So each one of the applications are being reviewed manually. And so they're hoping to see some distribution of these funds start to occur towards the end of the month. And that is what they have indicated at this point. Now, I will want to point out here that unless you have been living behind a rock or your head's been in the sand, we are in the throes of an administration change. And so next week, as the presidency changes, the cabinet members change, and the secretary of HHS changes, you can maybe see some delays to that. So please keep that in context. But that is what the current administration and the current staffers that have been working and what I call career folks at HHS have indicated to us that is still the plan. So just keep that in mind regarding the phase 3 funding if you have not received funds. As always, you can always ask questions, and we'll be more than happy to continue to keep following up and breaking that news as we get it. Now, the reporting is what we're talking about today, and these are 3 dates as it stands right now that you need to be aware of. We are anticipating that tomorrow the reporting portal will open. Hence the reason why we're having this webinar. There has been no indication that that is not going to happen. I'm skeptical, but because they haven't announced a delay as of 1 o'clock today, we can probably reasonably expect that that portal will open tomorrow. Okay, what time it opens, we do not know, but right now the deadline is it will open up. Now, it will give you 30 days till February the 15th to report, and we'll kind of go through some of those parameters on who reports and why and when. And then July 31st is your next date that you need to be aware of. That is the reporting deadline for funds if you did not expend all of the funds that you've received so far by the end of 12/31. So what is due right now on February the 15th is for those funds that you expended through 12/31 of 2020. And if you have unused funds still, then this would be the next reporting deadline for those unused funds before you have to return them. Okay, and we'll go into that more in some of these slides as well. So let's kind of get right to it with the reporting guidelines. There are 3 points to consider. One is apply your normal accounting methods. So if you're on a cash accounting system, apply cash accounting. If you're on accrual, apply your accrual accounting method. So apply that normal when you're doing your reporting. Number 2 is remember that healthcare expenses are only attributed to the coronavirus. But remember, their definition of what is the healthcare expense to the coronavirus would be to plan to prepare for whatever. HHS has broadly determined a COVID patient to be anybody that you technically treat at this point in time as well. And then your loss of revenue attributed to the coronavirus. And this is where people get caught up, and I'll be going around about the loss of revenue a little bit more about what in some detail and give you some examples as well as kind of parse through some of those FAQs. But hopefully most of us understand that, but I do know that this is probably the most asked question is around loss of revenue. So an FAQ, and I'm going to reference some of these FAQs that are in the, I think there's 60 or 70 pages of the FAQ right now. So I'm trying to condense these down to you so you're not just saying, oh, this is just something Asbel is opining about, but there is some actual, most of the information that I'm giving you today is really not my opinion. I'm just trying to parse it down into consolidate it for you. But here is a question that has been asked a lot by many of you. If an entity incurred enough lost revenue in April and May to justify its use of the provider relief funds received, can it only report those 2 months? No. When you're reporting, you must report all revenue expenses and expenses for the full calendar year of 2019 and 2020. So the information that they're going to be asking you for is for all your information. And I know our industry doesn't like to give information. Welcome to the new world of healthcare. Welcome to the new world of transparency. And it's the reason why we've been talking about that. If you've been attending some of our webinars that we've been doing with the American Ambulance Association, we've been talking about that the coronavirus has brought healthcare providers into a whole new realm, especially ambulance, especially with data and uploading data and data that we've not necessarily been so transparent about. So just remember that this is, you still, just because it's only for April and May of 2020 doesn't mean that that's all the information you're going to send up to them is for those 2 months only. It is relative for the entire reporting year. And so what are these data elements? So let's start walking through them to just give you a very Cliff Notes version of this. So the broad-based definition includes also your G&A expenses. And your G&A expenses would be your general and administrative expenses. So not necessarily just healthcare related, but and I'll kind of go over what some examples of your general and administrative expenses of healthcare. It must meet the parameters, and this is where the broad-based is, to prevent, prepare for, and respond. Okay, so it's going to be almost all of your expenses unless you have diversified income streams. If all you do is ambulance and you don't do any other diversified income stream, which I know a lot of you do, because of the cost data collection work we've been doing over the last several years when we were talking about revenue. A lot of you have become very creative in creating diversified income streams that are not necessarily healthcare related. So you'll need to remember that when you're looking at expenses and revenue as well if you have diversified income streams. Also remember about expenses incurred as of January the 1st of 2020. That is typically the date that most of you should be using. HHS will consider it extremely unusual if you try to use expenses prior to that date, because technically most concur that the virus did not make it here until 2020. However, it is called COVID-19 for a reason. So you'll need to justify that if in the event you are on the East Coast or West Coast, I would think possibly or what have you, but it would be very unusual for you to have expenses prior to 2020. And then remember as well, guys, is the expenses are eligible through June the 30th of 2021. There was some misinformation out there where individuals thought they could only do it through 12/31 of 2020. That is not the case. There are several FAQs regarding that as well, and clarification that has been given that you can utilize increased expenses or loss of revenue to be expended through June the 30th of 2021. Okay. Now, I did put a caveat on that because remember, this was in effect as of when I did this webinar and updated slides as of January the 12th. So unless Congress passes legislation, they could do some adjustment and addressing to this. And we do understand that there is probably going to be another COVID package within the first 120 days of the Biden administration. So I would anticipate, folks, that there could possibly some changes to this, or there may not be changes to it. But just remember, this is relative as of today, that these are the actual dates and timelines and definitions that you need to be thinking through as you report. So let's talk through general administrative expenses, and I want to highlight a few things here. Mortgage and rents, that's pretty self-explanatory. Your insurance, the only caveat that I'm going to tell you about insurance is remember when you're looking into 2020, sometimes your healthcare expenses may be rising because it was impacted by the COVID. Your liability insurance, they were making estimations because they don't know. So some people are receiving insurance premiums that were related because they're specifically related to the pandemic. If they're not, there's another but for that we'll talk about that thanks to Brian Werfel's really kind of brought that to the light, and I am using and plagiarizing it now from him, but I'm giving him credit for it since he's on the phone. If he wasn't, I wouldn't give him credit for it. No, I'm just teasing. That was funny to me. I thought it was funny. And then the personnel side of it. Now, I want to talk specifically about the personnel and the fringe benefit side because a lot of you have been talking about and our industry is experiencing workforce shortage issues and different things like that. Typically, because they are considering the CARES Act funding grants, bonuses are never eligible expenses in a grant, ever. So if you ever get some type of federal grant or whatever, they typically, it's a grant is typically bonuses are a disallowance. However, a hiring bonus has been very specific that they have made some, and you are going to see a push out from, or there's going to be some information that you're going to get. I don't know if it's going to push out here now or what have you, but it is the Provider Relief Fund. It is an allowable expenses overview that they have already issued that are going to give you some specific detail. I'm just kind of pushing it on there, and you're seeing it pushed out now. So if you want to download that, that'll give you some very specific examples. But I want to look at very clearly, guys, a few things I wanted to point out in this example for you. And one is around the bonuses. So you can offer a hiring bonus, and you can use your CARES Act funding for a hiring bonus. You can also use it for other bonuses, but you need to recall them retention payments. So because typically if you put it as a bonus, but you're doing it because I need to retain, you're seeing some innovation out there to try to get people to take the coronavirus vaccine, and people are offering them $500 retention payments if they take the COVID vaccine because they need to retain their workforce. So the exact the exact language that's being used in fringe benefits is a retention payment to expand or maintain patient care capacity. Focus on that. So if you're doing anything for your employees because you need to retain them, or you need to offer something for them, but you're doing it in the place of a bonus or something like that, you might want to call that a retention payment to maintain or expand patient care capacity, if that's what you're looking at, okay? So I'm just bringing your attention to that because you're beginning to see people say, well, this is a retention payment. There's a reason for that. Typically, bonuses aren't allowed to trigger an audit, things like that. So that would be my suggestion on that. Lease payments, guys, utilities and operations and different things like that. That's pretty self-explanatory if you're looking at that. If you outsource your billing, if you've had to increase certain things like that, those are the type of things that you would want to look at when you are looking at your general and administrative expenses that may not necessarily be healthcare related, but they're a part of the business unit and providing that healthcare services. So here's an FAQ that I wanted to bring your attention to. So this just isn't something that Asbel's talking about. But on 12/11, on December the 11th, there was some information that was put into an FAQ that went to kind of what I was talking about on the retention payments and hiring bonuses. So our expenses related to securing and maintaining adequate personnel, reimbursable expenses under the Provider Relief Fund. A lot of you have had these questions. Here it is the actual answer in that you can use that HHS published. So yes, you can. It includes the hiring, as I talked about, childcare, transportation, temporary housing. Some of you have been, having staffing shortages in some of your service areas, and maybe you've been housing them or housing them because there was a COVID outbreak and you need to keep your employees, and so you want to keep them separate from their relatives that have COVID. That is allowed to secure and maintain adequate personnel. This is good information for you because a lot of you have asked, how can we use our CARES funding? So let's talk through the healthcare related supplies. A lot of this, guys, is self-explanatory in supplies and equipment. We've talked about that ad nauseum. Information technology is one thing that I do want to talk about because that has come out with questions. Remember, a lot of you, especially, don't forget about when you're talking about information technology, not just direct patient care as you've been doing it operationally on your ambulance units, different things like that. I'm talking about maybe back office stuff. Your work from home technology that you've had to upgrade people to. If you've had to upgrade and enhance your internet capabilities because you're utilizing that more. You had to purchase internet for your employees so they could work from home. All that other kind of stuff that's relative to because of the public health emergency. Those are expenses that you need to be thinking about. Okay, that's I'm drawing that to your attention. Your facilities. If you've had to increase capacity, if you had to upgrade conference rooms for physical distancing, if you had to redo some of your operational centers that your medics are in for physical distancing requirements, so you had to enhance them, all of that is relative and CARES Act funding can be used for. And since many of you downloaded that PDF that I saw downloaded, that gives you a lot of good examples. And they've got 2 questions at the very end that I really like. So think about that. And then I'm going to talk about a but-for analogy. Is this expense necessary and reasonable to support patient care efforts to prepare for, prevent, and respond to coronavirus? And the second question, is this expense incurred consistent with our organization's policies and procedures? Remember that. Unfortunately, there was some information that went out about people purchasing technology and other things. And so you got to be careful because, yes, it is covered. But remember, if it differs from your normal operating procedures, so say, for instance, you replaced EKG monitors every 5 years, but you have this extra and you're like, I'm going to start replacing them now and using this funds for them because I need them. That's probably not appropriate. And when you get audited, it'll probably be disqualified. So be careful about stuff like that. But however, if you all of a sudden you had increased patient capacity, now I need 5 more additional monitors to handle the coronavirus pandemic in my area, well, that would meet the specifications because but for the pandemic, you would not have purchased those additional 5 monitors or ventilators or whatever else that you're doing through the process. So just remember, I think the last question there, is it consistent with our organization's policies and procedures? Just remember, make sure that, because if you're audited, they're going to look for that consistency as well. And then Brian's going to talk a little bit here that if you meet a certain threshold, you're going to have to provide some auditors that are going to look at those controls as well. So here's another FAQ. So Asbill's not just giving you his opinion. The terms and conditions are really important, guys, that you are signing. Remember that. So this one is actually talking about how, if we're getting reimbursed for our healthcare related expenses and lost revenues attributable to these, what is considered eligible for reimbursement? It is here is telling you you can use any reasonable method of estimating the revenue. Just make sure it's consistent and it's reasonable. It's something you've done. If it's budgeted versus actual, if you normally look at actual versus actual, when you're comparing something from 2019 to 2020, just use a reasonable method to estimate that, to understand when you're comparing one period over another period. And they opined on this in October because that was a lot of questions. And at one time they were doing actual to actual, and they actually went back and talked about you could actually use budget to actual as well, if that is normally in your reasonable normal of what you used to do pre-pandemic. So what is loss of revenue? I will tell you, I've answered more questions, had more phone calls, as I know many of us have had, about this loss of revenue. So we talked about expenses. That's pretty clear, cut and dry about expenses. Loss of revenue is where it seems to be tripping a lot of us up. Remember, it's a broad base, just like your expenses. It's any revenue that the healthcare provider lost due to the coronavirus. Now, break it down to ambulance. What does that mean? Typically, guys, loss of revenue is going to look at things like if all of a sudden I was doing 100 transports a month and now I'm doing 50 transports a month, you can reasonably assume you've got lost revenue. Uncompensated care. Right now, we have been advocating as an industry to get reimbursed for treatment in place, but right now that has not happened. So through 2020, you've got treatment in place. That is uncompensated care. Medicare doesn't pay for that. A lot of Medicaid policies don't pay for that. Some are paying for it. Some commercial plans don't pay for it, and you might have uninsured where you're mandated to treat in place. Well, there's a loss of revenue. You're providing now a treatment that normally may have occurred with a transport, so the loss of revenue is happening that. And also remember increased allowances for doubtful accounts or bad debt write-offs. You may be seeing more bad debt happening as well. That could be equated to a loss of revenue. And remember, it has to meet the parameters of prevents, prepares for, or responds to coronavirus, which if you are strictly an ambulance service, everything you're doing revenue-wise is going to be attributed to that, because HHS broadly defines a coronavirus as every patient you're treating at this point in time. However, if you are diversified, remember you'll have to have a way to tease out your diversified income. I know many of you have created things where you're doing dispatch for revenue for someone, or you're doing you're using your facility maintenance ops to provide maintenance to other things that aren't related to your business lines. I mean, there's a lot of creative stuff that many of you have done that we've teased out of the cost data collection project. And then also remember, you can include this through June 30th of 2021 with that same caveat that could change in the first 120 days of the Biden administration. So this is a great question. If you have to start here, if you're not sure, ask yourself, but for the pandemic, would we have incurred this expense? And this is something when Brian Werfel and I were doing a webinar on behalf of the American Ambulance Association. He made this statement, and this is a common business principle, and they use it a lot in the legal profession, but for, and this is applicable here, guys, but for the pandemic, would we have incurred this expense? Or I probably should have put here as well, would we have incurred this revenue or this loss of revenue? So if you're unsure about something and you're looking at that provider relief fund cheat sheet that I sent you that HRSA came out with, or it's relative to or you're unsure about it, start with this question. And if you can't say yes, then more than likely it's probably something you shouldn't be using as well. So now I'm getting to the audit requirements, and this is where I want to spend probably 10 to 15 minutes to make sure that we really understand this. And Brian Werfel is joining me now. And thank you, Brian, for joining us and talking us through some of these audit requirements. And knowing my personality type, I'm going to interject, but I'll try to be as quiet as possible.
All right. So good afternoon,
Right.
everyone, and good morning to those of you on the West Coast. As Asbel said, we're going to sort of go over these audit requirements in, let's say, a 10 to 15 minute span. My own personal over-under on before Asbel interjects is 5 minutes. So now would be the time to get your bets in. But I think sort of the reason that Asbel asked me to take this one is this is sort of the unintended consequence, if you will, of all of the programs and all of the benefits that we've gotten from the government in terms of the provider relief funds. So just to sort of walk through some of the background on this issue, it's not a new issue. It's always existed. It's just the interplay between the organizational characteristics of your entity, whether you're a private service, a public service, you're affiliated with a county, municipality, whatever, and these provider relief funds that's going to greatly expand the number of entities that are going to be subject to these auditing requirements. So one other thing to keep in mind is auditing is different than reporting. Reporting is generally a very superficial set of information that you push to the government, right? Auditing involves ultimately filing something with the government, but it's really more an outside look at the process by which your organization spent the money. So the backdrop here is there are two different auditing requirements for entities that receive federal funding. There's one that applies to what the government calls non-federal entities. By that, what they mean are local or state governmental entities, tribal entities, and nonprofits. And then there's a separate requirement for for-profit enterprises. It has always been the case that any non-federal entity, meaning the nonprofits and the local governments, that receive more than $750,000 in federal funding had this audit requirement. It's become an issue for us because, or a bigger issue for many of us, because the provider relief funds that you get, as well as the uninsured payments, count towards this $750,000 requirement. It also aggregates. It's not $750,000 from any specific federal program or even any federal program within HHS. It's the sum total of all of the money you've gotten from the federal government. So for those of you that are county or municipal based, the monies that you receive as the EMS entity or department within that county government go into a pool that's also aggregated with money that you might get for transportation, other social services, anything, across the wide spectrum of monies that the federal government may spend. So if you are county based, couple of things. One, you may already be subject to the requirement as a county, but your monies will now need to be part of that audit, right? If you were not subject to it, you may be now because of these monies, but it's really going to require coordination between your department within the county and other county agencies just to see, if the requirement applies. For you nonprofits, it's a much simpler analysis. Generally speaking, a nonprofit is not going to receive federal funding across a wide range of federal programs. If you're providing EMS and you're getting funding there, it's unlikely that you're also getting federal housing subsidies, as an example, right? But certainly the governmentals may have the issue. On the private side of this, you're looped in under the same $750,000 threshold. Now, to put this in perspective, when we first talked about tranche 1 and tranche 2, and keep in mind, as Asbel indicated, we were only getting 2% of our net patient revenue. No one really thought that this was going to impact the vast majority of EMS agencies. Again, 70 some odd percent of EMS agencies in the country do less than 1,000 trips a year, Asbel? I think he said yes there. in order to get more than 750,000 based on 2% of your money, you need revenues of 37.5 million or so. So that's likely not going to be the case just based on the 2%. But in that tranche 3, where we got this sort of welcome bonus, where we were also being compensated for up to 88% of our losses, that may raise that threshold of included entities to be much broader, right? I think just some back of the napkin calculations by me and Asbel came up with, once you start getting around 10 to 15 million in revenues, you're starting to get pretty close to someone that might be impacted by this. That's based only on the HHS monies, right? You also have to look at any of your county stuff. So there is a question which I'll answer now because it's a simple one. The question is whether or not the paycheck protection money counts towards the $750,000 requirement. Thankfully, no, it does not. It's specifically exempted because that would have just radically included or increased the number of entities that are subject to this requirement. So if you are subject, if you have 750,000 in government funds that you've expended, and we'll talk about one thought as we wrap this up, and you are a non-governmental entity, you are required to do either program-specific audits for each of the various programs under which you receive federal funding. So if the only program you received money under was the provider relief one, you would need to audit that program, right? Or you can do a single review, which you file with the IRS. And it's called, that's where the term single audit comes from, right? If you're a private entity, meaning for profit, you can either do the single audit that you report to the IRS, or you can do an audit in accordance with what's called generally accepted account auditing standards, The difficulty with both of these is that they are very, very comprehensive audits. So we're referencing here the OMB, Office of Management and Budget Addendum to the 2020 Compliance Supplement. That's an addendum to the Compliance Supplement, which supplements the underlying rules and regulations that talks about the various components of a single audit under certain programs. So the easiest way for us to think about this is a single audit is simultaneously a financial audit. So for those of you that already have your financial statements audited by an independent accounting firm, it is that process plus an audit of the internal controls within your organization that dictate how you spend money, right? So this means looking at board minutes, right? This means looking at workbooks, manuals, handbooks that determine the process by which, money is spent. So as an example, if your bylaws indicate that a particular individual is only authorized to spend $5,000 before they have to seek approval from the board of directors, you would need to audit your firm's compliance with that requirement, right? And if it turns out that the individual spent $10,000, it's potentially problematic, right? Why this matters is because it must, by law, be conducted by an independent auditing firm. So unlike the provider reporting requirements within HHS, which can be done internally, this will require you to hire outside experts. Now, if you're already doing a financial audit, and for entities with $15+ million, I think that's a fairly safe assumption, right? That auditing firm will likely also be able to complete these single audit requirements. But, for smaller entities, and in particular here, I'm thinking the counties or county-based EMS, where the hodgepodge of different federal programs collectively puts you over the number. Well, if you were already over it, you're familiar with the process, and it's just a question of making sure that the county manager or whoever oversees the process does reach out to you to get your information on the provider relief funds. But if it's new to you, then yes, you're going to need to go out and hire an independent auditor. Now, Asbel and I beforehand were kicking around one thought, which is it's not technically the receipt of $750,000 or more. It's the expenditure of more than $750,000 in grants. So, to use an extreme example, what if you received $750,001, but you haven't spent the last five? It would probably make sense in that extreme example to return those $5 to HHS and avoid having to do the single audit, right? In theory, yes. In practical terms, many of you have already spent these monies, and you're probably not going to be over by just about $1. Asbel, I think you're muted there. I think Asbel's still muted. You want to try again, or should I keep going? So just to reiterate, when the Provider Relief Fund program was first put out, there was this thought that quarterly reporting would be required. And that was the rule up until about midway through 2020, at which point HHS reversed itself. What they did, the original requirement only applied to entities that got more than 150,000 in relief funding. What they did in the third quarter, or the early part of the third quarter, was both lower the threshold for reporting to 10K in total funds, but then make it mandatory for everyone, not quarterly, but a one-time filing. So I know we did have a question earlier that asked, about the reporting. Yes, it will apply to anyone that gets more than $10,000, and they will be required to file a single report in February, regardless of whether they've spent any of the money or not. In fact, the entire purpose of the report is, to the extent you've spent the money, to tell us what you've done with it, and if you haven't spent us, essentially to tell us why you haven't spent it, right? So the single audit is an IRS filing. This is the regulation that applies to it. It is a remarkably complex requirement. So I'll just give you the Wikipedia version of what is required. You must retain an outside auditing firm. They will conduct a financial audit of you. They will review the OMB supplement to determine what additional steps they need to look at, which would include your reporting requirements and have you done them. Will include a look at your internal controls, your organizational documents, etc. They will then assign you either a type A or a type B audit, depending on the amount of federal monies that you received. If you're under 25 million, you will be a type A audit. In this limited example, when you say something is type A, we mean it in a positive way. They will then decide whether or not, although you're in type A, are you high risk or low risk? You will all be considered high risk. And the reason is, or the majority of you that are first subject to this will be considered high risk, is because one of the requirements to be considered low risk is that you must have filed a single audit in each of the past 2 fiscal years. So for those of you that are first becoming subject to this requirement, you would not meet that. And as a result, you are high risk. And as a result, you have to go through all of the bells and whistles, right? So it is a very labor intensive process for organizations. So those auditing firms that I've spoken to have said that, it wouldn't be unusual for this type of audit to cost in the tens of thousands of dollars. It would typically take several months to complete. Good news is you have until September to file it, but it would be very disruptive to your operations. So if we can avoid it, great. If not, this is the sort of thing that I think you A, need to confront head on sooner rather than later, and B, you're going to need to retain local experts to help guide you through this, right? Again, by law, the audit is filed by an independent auditing firm. You cannot submit this on your own behalf, right? So who's subject to it? Well, according to Q&As, provider relief funds do apply to it, as do targeted distribution funds. For those of us in EMS, we're likely here referring to the program for the uninsured, right? It does count towards these expenditures. As I indicated earlier, the Paycheck Protection Program money does not. For commercials, you have a choice. You can do the single audit, or you can do an audit in accordance with the government auditing standards. So those auditors are telling me that the government auditing standards are slightly, only slightly, less burdensome. So what they call it is single audit light. And by light, they mean about 90% of a single audit. So one way or the other, this is a fairly burdensome requirement for smaller organizations. There's the regulation we talked about. Again, you're exempt if you get less than 750,000 in the calendar year. If you're above it, regardless of whether you're for-profit or not, you're going to be subject to some auditing requirement. Here's the regulation as it applies to nonprofits. Asbel, I'll turn it back to you.
Perfect. Thanks, Brian. Can you hear me? Can you hear me?
We can hear you, but it's very, very low. Can you jack up the volume for me?
Can you hear me now? Sorry, guys. I'm not sure about technology.
Still pretty quiet. Hey, Brian, why don't you cover a couple of the questions we have
Sure.
on the right, and then I'm going to get Asbel's audio corrected.
Sure. So I guess I'll take them down from top to bottom. Question coming from Troy was whether or not the 215 report deadline is mandatory if you've not spent any of the funds. Yes, it is. It's mandatory as long as you've received over the $10,000 threshold. To the extent you haven't expended any of the funds by today, that would mean that you hadn't expended them by the end of last year, December 31st. What that would mean is that in that situation, you would have not only a 215 reporting requirement, but also a July 2021 reporting requirement. And presumably, if you haven't spent the money by July, they would likely ask you to refund that money. A question came in. I'm assuming this is referring to the provider relief funds. And what the question said was that we received 2 payments separated by 1 day apart in phase 3. Is that expected or not? The answer is it depends. So what's happening in that instance is likely that you had received less than 2% of your net patient revenue after the first 2 tranches. So you were then getting a check to gross you up to that amount, and then at the same time getting a check to compensate you for lost revenues over and above that number. So that's probably the explanation for the 2 payments there. Keep in mind the way they did it was to first get everyone up to 2%, then figure out how much money was left over, and at that point then figure out an equitable distribution for everyone else. Asbel, you back?
I think I'm back. Can you hear me now?
I can hear you just great.
Perfect. So I think it just has something to do with my earbuds or something like that. So, well, good. Brian, thanks on the auditing stuff, and we're going to get right to the questions as well. So let's give it. I just wanted to give y'all some lanyap information. And in Louisiana, that's just some gift outside of this, the HHS reporting side of it. So some of you guys have talked about you have unspent funds. And you want to return them now. We received several questions on that. We'd like to return them now. If you have used some of your funds and you've got some left over and you don't anticipate using them, there is no guidance yet on returning those type of funds yet. So there is not a way to return those funds, and those funds will be returned whenever they do the June 30th, and then by July the 31st, you'll receive more guidance on that. If you have received funds like $1 million and you've not used any of the $1 million, there is guidance on that as well. That's already been issued. That was issued back out in May and June that you can return that to directly. You can call the provider line and they can give you that information. And if not, I'll subsequently follow up with you if you have that issue as well. But most of the questions we received is, I received $200,000. There's $50,000 of it I haven't used. I don't anticipate using it and want to go ahead and return it. There is no guidance yet on that process or what have you. So just wait on further guidance on the returning of those funds. The only other thing that I do want to bring people's attention to is there's a lot of reference to the terms and conditions. And there's several pages of that terms and the conditions. And just remember, with you expending those funds, not that you receive them, but once you start expending them, there's 3 main elements to look at. One is you have to certify that you're using the payments for stuff that you have not been reimbursed by other sources, or, and I've underlined this, other sources that are obligated to reimburse. Now, remember, if Medicare is supposed to pay for something or Medicaid or commercial, you can't say, well, they're taking too long to pay me, so I'm going to go ahead and just apply these funds to that or whatever. You cannot do that. And your audit, they should have paid you that. You should have went through your normal billing processes on that. That has been some questions that we've received as well. So that's why I'm kind of hitting that and pinpointing that piece of it, because that is in your terms and conditions. And if they decide to audit you after 3 years, remember that you have to keep your expenditures. That's my next point. All of those receipts, all that information, kind of follow your same records keeping guidelines now. Most of you keep that 7 to 10 years already, or 5 to 10 years, depending upon what your state may do on your Medicaid. Some states' Medicaid programs require you to keep them up to 10 years. So some people just keep their everything up to 10 years. But remember, you do have to keep your records on file for these expenditures up to 3 years from the final expenditure. And then also remember too, and this is just normal vernacular, and Brian Werfel's extremely aware of it from the legality perspective of it. But remember, failure to comply, they could recoup part of the funds, or they could come back and recoup all your funds from you for any failure to comply with anything. So for instance, if you did something and really should have only paid back $100, they could come back and say, you didn't comply with the whole terms and conditions. We want all of our money back as well. So just remember that if you're wanting to skate in the gray areas, this might not be the time to do that as well. So just remember, they do have the authority to do this, and they can do it up to 3 years, and they have appropriated billions more dollars to the Office of the Inspector General for this oversight. And this continued oversight. Even in the last relief funding, they put more money into it. So they do anticipate that happening as well. So let's get right to, this is an FAQ. I wanted to say, guys, thank you to everybody that's on the front line and every first responder. I will tell you, there has been yeoman's work done on behalf of the American Ambulance Association. I know in conjunction with Global Medical Response and their PR firms, and everybody on the local levels working with their media to really get us into the news. I have never seen first responders on the cover of Time as much as we have, and that just goes to show, guys, really the recognition that we're getting as an industry. Now it just needs to equate to providing financial resources and getting the help that we need to our front lines as well. So thank you for everything that you do as well. Also, I wanted to give a plug here before we get to some of the Q&A. Is many of you may have already subscribed to this Amber Cost Data Collection Project with the American Ambulance Association. There is going to be a release, I think next week, on a simple form that's been created to help you with some of this data collection as well. So stay tuned to that if you subscribe to that. If you don't know and want to look at the Amber product, this is a part of the cost data collection tool that many of us are involved in as well. ambulancereports.com is where you want to go on that. And Brian, I'm going to turn it over to you to start working us through some of these FAQs, because I know there's a lot coming in that chat box.
Fast and furious, absolutely. Okay, so our next question comes from Brett. He said, our organization operates based on a fiscal year, not a calendar year. Must we report based on a calendar year? Asbel?
So, I'm sorry, hang on a second. So what you need to do there is, remember, it's the expending of the year. So it's going to be 9 months from the calendar year for that HHS reporting. Now, I will tell you that there is an FAQ update that you're going to get out. We just didn't receive it in time for that. But you can actually ask for a 90-day extension or a 3-month extension as well. That was just issued in the FAQ at the end of on the 12th. We just didn't have a chance to update here. So technically you could have up to a year, but you'll have to work through that. So it's calendar year expending, and it's expending, not receiving. And I know me and Brian Werfel are using that phrase correctly, because it's what you've expended. If you only expended $600,000 in 2020 of your $800,000, you don't have to do that reporting requirement for 2020.
Well, and just to clarify, Asbel, for the provider relief funds, yes, it's a calendar year, and it's based on the receipt of funds. For the single audit, correct, but there it is actually based on your fiscal year, the reporting period. So in theory, if you're operating on a fiscal year that ends in, say, September, you would also need to look at federal funds that were received by you in the fourth quarter of calendar year 2019, because that's part of your I guess we'll call it 2020 fiscal year, right? But generally speaking,
For your yeah, for
right.
the for the governmentals and the nonprofits, you're exactly correct, because you're not just looking at PRF funds and HHS funds. You've got other funds.
So for the
good
for the
clarification.
HHS reporting that's due in February, that is calendar year based. It's based on the monies that you've spent during calendar year 2020. The single audit operates. The trigger for the single audit is the filing of your tax return, so it operates on the same taxable year you operate on.
Okay, next question comes from Charles. Just a general question. What if we're paying employees to work at COVID clinics to provide vaccines and mass clinics under a mutual aid request? Can their wages be considered COVID-related expense?
Yes.
Yeah, absolutely. Absolutely.
Okay, next question is from Shannon. We have 2 dedicated ambulances. Can we use these payments? Can we use the payments of these units to claim on the expense side, I'm assuming? Asbel?
I'm not understanding.
Yeah, Shannon, would you
If
mind
you'll
maybe
follow
just
up with
following up?
that question?
Okay, I did a little
If you'll follow up with us on that question, we'll talk to you on. We need to get some more context before we answer that.
Okay. Next question comes from Edward. Does the PPP money count toward the $750,000?
No.
No.
Okay. Next up.
Easy question. That was an easy answer.
I think this may be from our same Shannon. What about if we receive state COVID CARES money? Is it considered federal?
So that would be the local and state part of the same provider relief fund. Yes, that is federal funds. It's just going through local and state government.
Okay, thank you.
But it's not CARES Act funding. So remember, if you're talking about that in reference to, so let me I'm not sure how you're talking in reference to, because you probably were answering and I'm going to make an assumption here. And if that is wrong, and you're the same Shannon that's going to follow up with this later, we'll answer that question. But the CARES reporting that we were talking about regarding the audit is the CARES funds distribution from phase 1, phase 2, phase 3, and your uninsured, that's the aggregate amount they're going to be looking at. If you receive money through PPP, local and state governmental funds, that's a whole different concept. That's not what we're talking about here.
Okay. Next question comes from Mark. If we had 7 million revenue in 19 and 6 million in 20, does that mean we have 1 million in reimbursable lost revenue?
I was not aware that there was going to be.
And it was all related. What did you say, Brian?
No, Mark, the short answer is yes. So the way that HHS is calculating revenue loss is on a static model. They're simply looking at either the applicable quarter in 2020 compared to 2019, the same corresponding quarter, or depending on how they're using it for that entire year. So for the purposes of in terms of calculating how much you got in tranche 1, 2, and 3, they would only be looking at the first 2 quarters of 2020 and comparing those to the first 2 quarters in 2019. So assuming that you lost the $1 million equally over the year, you would have a $500,000 loss in those 2 quarters, right? But then the question in terms of the PPP, the Paycheck Protection monies, that's not factored as income, but what you can't do is claim, right, monies that you used from the PPP program for a particular expense as an expense using provider relief funds. In other words, the same person can't be paid twice out of both programs. So there is no double dipping here, right? So
yeah, so when you look at your net, Rob, remember the $750,000 calculation that we were talking about for the audits, if you have to do that single audit or that commercial, or for the for-profits, you could have a single audit or the government accounting standards audit. This is different than if you are under the $750,000 and you're just going to be providing reporting. When you're looking at your net losses, you have to apply all other revenue sources. So if you received revenue from Medicare, Medicaid, and you got PPP funding, and you got funding from local and state governmental funding, and what have you, you have to apply all of that, and then whatever's left over, this CARES Act money can go. So think of it like pay or last resort. That's that reporting piece. You do not use PPP revenue to get you to the $750,000 threshold. I want to make sure we draw that correlation between the two, Brian, because that might be confusing some people as I'm seeing these questions here. So there's one thing about what you're doing under the reporting side of it. Then there's another, do I meet the 750,000 expended requirement to have to do this single audit or get an internal audit that I have to have submitted on my behalf? You do not use the PPP funds for that threshold, but you do have to apply all other funds when you're looking at your losses.
And in terms of the expenditures, a couple of pointers for everyone. One, allocate expenditures from a particular program on the most granular level possible. So if a program is specific for one thing, put that money there first. Things like the Provider Relief Fund or the Paycheck Protection Program have much broader criteria for what is an allowable expense. A good way to think about the distinction between the two, though, is an employee's salary. Monies you spent for an employee that was already on the books, and that's not necessary to retain them, but it's simply compensating them for the same job they would have done anyway, meaning it fails that but-for analysis, is eligible to be paid out of Paycheck Protection money, Paycheck Protection Program money, right? If you increase their wage in order to keep them from walking off the job, that is an expense that could be used, the Provider Relief Funding could be used for, right? Paycheck Protection Program just puts you in the same position you would have been vis-a-vis the employees as if you fired them or let them go versus kept them on. If you're incurring additional expenses related to them, that's where the Provider Relief Funding comes in, right?
Okay, so we're just about out of time. Let me throw this next one up. It's been asked a couple different times. Is the cost of the audit a proper way to spend the dough?
I don't know that it's the best possible use of money, but it's an allowable expense, yes.
Yeah, fantastic.
It's eligible, and if you've never had an audit like that before, it might be interesting what they find out as well. So, but it is an eligible expense.
Yep. All right, so we have some other questions we didn't get to, guys, but so here's what we'll do. We will follow back up with you with each of the questions and make sure we get a good answer to you. And meanwhile, I want to say thank you so much to the entire group for joining us today. It's been a pleasure to spend the last hour with you. A special thank you to Brian Werfel for joining us today, and appreciate you jumping on with Asbel and I. And listen, thank everyone out there for what you guys do on the front lines. It means the world to us, to your communities, and just want to say thanks to everyone, and please stay safe out there. Have a great day.